In a trading update for the third quarter of 2011, Nedbank Group said that the operating environment in South Africa remained tough on the back of potential contagion from the Eurozone sovereign debt crisis. Net interest income grew by 8.9% to 13.3 billion rand for the 9 months ended 30 September 2011, while non-interest revenue increased by 15.6% to 10.8 billion rand compared to 9.4 billion rand in the same period last year.
Nedbank market cap 70 billion, price earnings 11.3, dividend yield 3.85. Chris, tough out there being a banker, I'm sure, but this wasn't a bad update. Certainly the market liked it, and it was trading above what the banks in general were. Not bad in a tough space.
Exactly, and Nedbank's always, you could say, they'd probably be annoyed if I said the struggling in the section.
Yeah, there will be a fair shout.
Because they're one of the big four, but the smallest of the big four, and that always means, you know, your critical mass in terms of your ability to compete. You're always there, but not quite, if you know what I mean. And that's the difficulty. Nedbank goes through enormous cycles, you know, where it is the stock to have, and then it's the stock not to have, that kind of thing. It's in a difficult space, and it itself knows that. But as you say, doing well in that difficult space. The European debt crisis is something that can affect the sector. It's the one big overhang on the financial sector, not just with the contagion, but the potential the uncertainty around regulation. There's Basel III, for instance, coming through.
So it's a Basel III and other potential implications.
There's a huge other things, you know, because banks are increasingly being blamed for the crisis, because politicians love to deflect blame away from themselves. Okay, the banking sector is such a nice sector because in 2008, in the US and Europe, the banks were bankrupt. They took an enormous amount of taxpayers' money, you know, to bail them out. In 2011, they're still bankrupt, but between then and now, they've had enormous bonuses. And of course, as we call Main Street looking in at Wall Street, is just looking at this and saying nix. And so it's almost like the banking sector has become the devil incarnate, the banksters, etc., as they're being called. Now, in South Africa, it's not as much of a problem because our banking sector has always been conservative, well managed, and in fact, I think came through the crisis pretty well. We know that there's been ripples behind the scene because they've become extremely conservative as far as their lending is concerned, and that's impacted on the economy. But nevertheless, we need to put our banking sector in the context of the thing. At some stage, this sector, you're going to salivate over the value. But I have a funny feeling it's still to avoid.
Well, let's wonder if Warren is salivating over the value in Nedbank. It looks like there's strong support, and that support line is on an upward trend, but it's not really shooting the lights out. Why are they not making any new highs?
Well, I would think that, you know, as Chris was saying there, the company is in a bit of a tough space. The chart is definitely showing us that. Very slight upward angle there at about 10 degrees. A strong trend would be considered 30 to 45. At the moment, we would be looking at support around 131 Rand a share. I drew on the end here, I just put some really short-term resistance down. It was pretty clear that 140 Rand was resistance on the stock. It hasn't broken that level for some time. I'd be looking for it to either break that level or come back to the lower trend line. Obviously, as time goes forward, the price will change from 131 and go slightly higher each day.
Warren, I wonder, what I'm seeing there as well is from that spike, which was in April, which was at around the 155-ish level. We've been seeing lower highs, which suggests to me that certainly, if anything, we're likely to go back to the low 130s before a break through the resistance at the 140 level.
I would expect that. Yeah, the lower highs, we've also got the rising bottoms, so the market's really squeezing Nedbank on its price.
Warren, you mentioned, sorry, not Warren, Chris, rather, you mentioned international regulation. Nedbank is currently sitting with capital ratios that are well in excess of the requirements of Basel II and Basel III, which is the anticipated Basel III. Are they not being overly conservative and prudent? And is it not then adding weight to the comment that before you can get any money from a bank, first you have to prove that you don't need it?
No, exactly. And I think that's where the relevance of the banking sector starts to, you know, be questioned. But that conservative tightness in these conditions may actually be quite well placed.
Boring bankers saved us last time.
Exactly. And the point is that if European banking system goes through the convulsions, and there's every indication that it will, okay, it's one of those things that may be beyond the capability of the sovereigns to actually rescue at this stage, then our banking system may be actually quite well placed to take some sort of leadership role in global finance, if you like, being solvent and still have got how can you say, ammunition left in their balance sheets. Whereas I think in Europe, etc., just to survive might be, doing well.
Chris, I want to bring it back to the local folks. Credit loss ratio, which we used to call bad debt in the good old-fashioned days, 1.13 versus 1.21, moving in that right direction.
Yeah.
And they talk about domestic credit demand subdued. They talk about household spending being supported by income gains. They also mention that corporates are still maintaining surplus liquidity. And that all says to me that people and companies are being careful, which is almost a good thing, though.
Exactly, and this is in a sense why the global financial crisis for South African company corporate is almost ho-hum another crisis, because we go through these regularly, and because of that, corporates are managed quite conservatively, and in areas that don't expect crises, you've had a lot of corporates that have come under a lot more stress and strain as a consequence. And that, in a sense, has been part of the resilience of the South African economy in general, but specifically the banking sector as we're talking about now.
Yeah, I'm thinking from 98 to 2008, we had, 3 or 4 of them. Our CEOs are used to these a dime a dozen.
Yes.
What do they call it? Non-interest income, which really we would call penalties and fees and those sort of things. Yeah. That's what the banks are focusing on. They're driving that quite well, 15.6% up.
That's not going to work, because ultimately you're starting to actually get to a point where your consumer's starting to resist, and that's why Capitec is becoming so successful. All right, and this particular growth in this game is actually probably exceeded or overstayed its welcome.
Chris, you said that there will be a point where we start salivating over the value of these banking shares. Nedbank has gained 6.3% so far relative to the broader banking index sitting at 3.4%. Your take on Nedbank as a stock, hot or not?
Probably within the banking sector starting to become hot. The whole sector, though, is not. I would stay clear of the sector for the moment, all right, until there's more clarity as to see which will be the winners and which will be the losers.
Warren, the share today ending 1.4% up and breaking above that resistance level of 140 Rand, only so marginally at 140.50 cents. What is the investors' call? What should we do? And what happens if it breaks down below that 131 Rand support level?
Well, if it breaks below 131, then the trend would have changed, in my opinion. The fact that it closed slightly above that 140 resistance today is interesting. I wouldn't be running into the stock. Simply this long consolidation would have to break. I'd be looking for the 155 as a confirmation that the uptrend will continue.
Warren saying a confirmation of the uptrend will be 155. What level would you be buying Nedbank at? And is it hot or not for you, Sandra?
I'm not a fan of it. You know, I like Chris's point on non-interest revenue. Everyone's excited about that, but at some point people are going to rebel and move to the cheaper banking options within Nedbank and Capitec and the like. To me, Nedbank's not hot. If I want to buy a bank, it's going to be a Standard Bank if I want Africa, FNB if I want local, and Capitec if I want cheap and exciting. Nedbank's just never been on my radar. To Chris's first point, they're now number 4 and they've never really excited. So for me, Nedbank, not hot.
Not hot for Simon Brown. In an operational update for the first quarter ended September 2011, Shoprite Holdings was pleased to announce that the group increased its total turnover by 10.8%. This compares with turnover growth of 9.7% in the corresponding 3 months in 2010. Shoprite is the biggest food retailer on the African continent. The group said that the same pressures that affected South African consumers continue to be evident in the rest of Africa.
Shoprite market cap 63.5 3.5 billion, price earnings 23, dividend yield 2.2. Chris, not a bad update. What I really pulled from it, total internal inflation 3.8%. We are starting to finally see inflation come into the retailers.
Yes.
It's been about a year and a half that we haven't.
Yeah.
My sense is this is not a bad thing for them. It gives them a little more pricing power. Is that a fair
Exactly.
shot?
Yeah, no, very much so. Inflation actually suits the retailers to a certain extent. One's got to question where we are in the cycle as far as this is concerned. I actually believe that we're going to see interest rates low for a long period of time. However, the impetus behind interest rates loses its effectiveness because it's the cutting of interest rates that actually gives some momentum. Just maintaining it means it's a bit static. Your consumers are under pressure because you've got an enormous cost increases in transport, electricity, household costs that Checkers, which is taking out of the wallet of the consumer, which means disposable income to actually spend at retailers is going to diminish. But Shoprite Checkers is the last to feel that effect, being a food retailer. So that's the mass marts and other retailers that feel the effect, the transfer of effect where you've got electricity going up at hyperinflationary levels and municipal rates and that kind of thing. That's placed pressure on households. So grocery shopping is the last to be impacted. You'd rather just keep your television for a longer period and that kind of thing. That's those are the first things to be cut back. So they're in a good space. This is a sector that in a sense your front runners change once in a while. There was a time that Checkers was an absolute dog.
And it was all about Pick and Pay.
And it was Pick and Pay, and now it's Checkers and Pick and Pay's the dog, as it were. And I think it goes through management cycles, as it were. And it's you effectively take the market lead, the others copy you, improve on it, and then overtake you. And these go through cycles, over the decades, as it were. But both Shoprite and Checkers are very strong, established players, and they're going to be sort of vying for first place. I think Checkers is at risk from a resurgence of Pick and Pay, because you've now got the eye on the ball here. You don't have this lead balloon that they had called Australia, hanging them back, and that probably is the biggest risk or threat to Shoprite Checkers.
Let's get Warren's take now on the technical chart. This is one of the top performing shares on the JSE, and in November 2006 it was sitting at 16 Rand. Today it closed in at 119 Rand. So what is the likelihood of this upward trend continuing?
The upward trend is very strongly in place. The lower blue trend line that I put in here is actually the long-term trend that comes back from that 16 Rand level. Shoprite just keeps extending, very little pullbacks in the share price. We saw it break resistance at 106 Rand 72. All we did there is I just took a Fibonacci extension of the consolidation. So it was resistance 1, 2, 3, 4 hits on the resistance level. That was enough. Took the bottom of that current channel, extended it to get a short-term target for Shoprite, which it hit at 118.62 was the first level over there. We saw it break through again. It extended up to around 121.91, right in that resistance zone for the current price action. So that wouldn't necessarily turn the trend of that stock.
Warren, we're seeing a short-term divergence in your OBV down at the bottom right there. Is that weighing on it, or is the price just too strong?
Well, I think that's an early warning for a pullback in the stock. It does pull back. It has its cycles like every other share on the market. On-balance volume is warning us that on the up days there's less volume in the share than on the down days, telling us the market's really selling the stock into that strength.
So we could come back to maybe even back to that sort of 106, 107 zone, which would be a buying territory probably.
That's what I would be looking for, yes.
Chris, obviously they are the biggest retailer on the African continent. Let's chat about the complementarities between the property businesses and the retail business. They're looking to expand quite aggressively into Africa, but they're saying that one of the things that's constraining the growth of new shops and building new shops is the fact that they can't find sites in Africa.
Yes.
Your comment on Shoprite as a property player?
Being a retailer, it's one of the more difficult business rights to actually get. And it's tangled in all sorts of red tape, etc. So it is difficult to get sites. I can understand that, and this is what local authorities don't often appreciate, is that they are probably the biggest obstacle to growth, generally, because that's where the rubber hits the road, and retailers certainly feel that more than most. But it's virtually any business, trying to operate in the municipal area would struggle, if there's shortages of whether it's industrial land or retail land or whatever the case is. I have a funny feeling the restraint in retailing that comes with that is possibly a good thing, right? Because the one problem that you can have with too rapid growth is funding it, in other words cash flow, that can put a strain, and cash flow is the source of retailers' profits.
And so that constraint on retailers, I'm sorry to cut you off, I really must apologize for doing so, Chris, but we need to move on and get your comment on whether it's a hot stock or not.
I suspect it's a darling. It's an absolute, it's done really very well. I would say not hot at this stage, because I think it's towards the end of its cycle. It's
a darling that's done well, but not hot at this stage. For Chris Warren, how do you feel about Shoprite?
I also say not hot. We've had a bearish engulfing with a double top right at the end there. On balance volume coming off, I would say not hot.
Not hot for Warren. Simon Brown, 2 not hots. What's your vote for Shoprite?
I'm distressed deeply. I own Shoprite, although I did sell some, and I like them. I think we are going to look at some weakness. The market immediate response to their numbers was to sail it off to a degree. I would take Warren's. I mean, if we get back to that 106, 107, then I think they're definitely worth it. I like their model, and I like them for the longer term. To Chris's point, the threat is Pick n Pay coming back into vogue again. Pick n Pay can't go backwards
anymore.
And
let's not forget Walmart coming into the country too.
And there's Walmart, so there's a lot of challenges out there for Whitey Basson and his team. But broadly, I like Shoprite. I think they've been a great management. I don't know how they're not going to do the same type of returns we've seen recently. That notwithstanding, I like Hot.